big tech IPO is back. ARM, Instacart this week. Now Klaviyo, another venture-backed company. But they're not all going public at sky-high valuations. Our Deirdre Bosa has a look at 2023 IPO valuations and just how much is different for today's Tech Check, Deirdre.
Sarah, you said it, the IPO market, it's back, but so far it looks a lot different than it did a few years ago. This wave will include some down rounds, meaning companies will raise capital beneath their prior valuations. Instacart, it's going public at a fraction of its peak valuation, which Bernstein calls reasonable and even conservative if it can return to better growth. There's also Klaviyo. This is an enterprise software play, and it looks to price its listing at just under its last financing round in 2022. It would be another down round. Of course, there was ARM's successful IPO. That was considered an up round, but it's a little trickier since SoftBank has been the sole shareholder since they took it private in 2016. It's also falling some 5% today as investors consider that hefty premium to other semi companies. Now, the second key difference this time around, there's more scarcity. The floats of ARM, Instacart, and Klaviyo are relatively tiny. On average, companies have sold 16 to 29% of their shares in IPOs over the last decade. ARM float less than 10% of the company, while Instacart and Klaviyo are selling only about 8% each. That could make for very volatile first days of trade this week for the latter two. And it also means that new investors will have fewer rights related to voting power and corporate governance. Now, part of the reason that companies are floating less this time around is because the current market is seen as more fragile for new listings. So the companies are putting less of themselves out there. And increasingly, they're seeking the security, the backing of cornerstone investors. ARM courted big tech customers like NVIDIA and Amazon as potential anchor investors. Instacart said Friday that Norway's sovereign wealth fund planned to subscribe for some $400 million, which is a lot if they're only raising $1 billion. Now, a cornerstone investor agrees to have their name published in the company's IPO prospectus in return for a guaranteed allocation of shares. And the hope is that that may support the price or encourage other retail investors to get in. You could call this de-risking. ARM, Instacart, Klaviyo, they are the guinea pigs of this IPO cycle, and they are going to do everything they can to make their listing successful, even if that means raising less money at lower valuations. But the key question, guys, going forward is, will other IPO candidates see this as an attractive model? Or are they going to say, you know, we'll sit it out. Maybe the market will come back and we'll be able to raise more money at higher valuations. That's really the question that IPO candidates in the pipeline are going to be asking themselves over the next weeks.
I was going to ask, who are they? Who else is in the pipeline? And can they sort of come up with these quality controls that appear more necessary in this environment?
Well, some might argue that Klaviyo is more important because you have more enterprise software companies in the wings. There's a Databricks, right, which is valued. I think it just had a rare up round in the private market, so that could be a candidate. But many of the enterprise software companies of the last few years, they're not looking at those up rounds. They're looking at tougher comps in the public markets, and that's why they're judging these so closely. But you've also got Discord. You've got some consumer names as well, and they're all kind of facing that idea. I mean, we talked about this valuation disparity. They think they're worth more than what the public market wants to price them at. So are they going to wait, or are they going to tap private markets again, which is also undergoing its sort of revaluation?
Fanatics is another one I'm watching in the consumer world. Deirdre, thank you.